talk about it from 3 different angles. And I would love for each one of you to take an angle. So maybe I'll just volunteer you into this. So Abdulrahman, you can take the VC angle. So you start with the big funnel. Dima, maybe you take the LP angle. And Ape, if you take the founder angle. Hi, everyone, and welcome to a new episode of the VC React podcast. Every week, we bring you insights and reactions from top VCs, LPs, and angel investors reacting to the latest news on startups, VCs, and investment rounds. Let's jump into it with our amazing guests for today. Abdulrahman AlJiffry, partner at 500 Global. Abe Seksek, an angel investor and host of the ABEZ show. Dima Shahin, venture partner at SVVI. And my co-host, Jamie Lane, from FWDstart. In the video description, you can find more details on our guests, their LinkedIn profiles, and links to their companies' websites. Our weekly news are brought to you by FWDstart, a twice-weekly newsletter that breaks down what's happening in the MENA startup, VC, and tech space. Before we start talking about the news of the week, I want to tell you about Octa, our new sponsor. Octa is an AI-powered workflow automation platform that helps modern businesses collect payments faster, smarter, and without the back and forth. If you're a founder or a finance leader, you know that managing receivables requires 14 hours plus every single week. It's chasing corrections, negotiating payment terms, updating invoice details, and constantly following up with your clients.
Octa automates the entire process, handling everything from invoice disputes to payment confirmations, so your team can focus on growth, not admin work. That's why more than 100 companies like Careem, Lean Technologies, and Algram trust Octa to streamline accounts receivable. Check out Octa at weareocta.com, that's weareocta.com, and experience the modern way to manage receivables.
Jamie, I hear we have a lot to cover today. What's happening this week?
Yeah, we have a lot to cover, and we didn't get to include nearly half of it seems like for whatever reason, everyone neglected to make any funding announcements this week, and they all deferred into this week. There's been like a ton, even this morning.
Yeah.
So look, it's been difficult. But look, I think there's an obvious place to start on one level at the same time, which I think is IMENA Group and their large pre-IPO funding round. So for context, I suppose IMENA Group, one of the region's leading digital platform operators. So they've raised $135 million in the first tranche of a pre-IPO round. Raise includes private placements and in-kind contributions backed by Sanable Investments, FJ Labs, Sagan Yalchin, and a number of other prominent Saudi investors as well. So the capital is going to be used to increase IMENA's ownership even in OpenSouk, ZenHR, and Genie. And the idea is to further fuel, I suppose, the vertical expansion and regional growth. IMENA Group started back in 2012, and they've also, as part of this round, restructured into a Saudi closed joint stock company. So I suppose a key step as it prepares for a public listing. I think one detail worth calling out here as well, I think, is the involvement of FJ Labs, which I think is quite interesting. Obviously, deep global expertise as it relates to network effects, businesses having invested in Alibaba, Coupang, Flexport, Delivery Hero, you name it. I don't think there's many businesses in that field of note that they haven't invested in. I think their portfolio includes over 30 unicorns in the sort of marketplace network effects space. It's also their second investment in quick succession regionally. They invested in Valio Health's Series B back in March as well. So look, I think that's a promising signal on one level. As part of the announcement as well, Sagan Yalchin, he's the founder of ZenHR. He's going to, and Souk.com as well, I should note. He's going to be joining the IMENA board. So joining Khaldoon, Nasir Al Sharif, and Ade Salaman in leading the next phase. So it's an exciting one. It's a big round.
Yeah, congrats to our friends Khaldoon, Tabaza, and Ade Salamin. I've watched their journey very closely. They've done a great job. We keep saying that would MENA get on the map of global investors? I think we are already on the map. That's it. We've seen a lot of global investors investing in multiple companies, not the first time, second time, and third time for some. But let me ask you this. I'm so sorry, it's a long question. In startup investments, there's this typical funnel. Accelerators invest in hundreds of companies, and then early VCs pick like tens of companies, and growth fund back a handful of companies, And of course, the earlier you invest, the higher the potential returns, but there's also higher risk. But there's this model now with IMENA. It's a group or a holding model where instead of investing across multiple companies, they double down on just a few, maybe 3 or 5 companies. Take majority control, not like VCs who take minority control or minority shares. They take majority shares, majority control. They go deep into operations and try to build synergies across those companies. Globally, we have Naspers that went public, Rocket Internet went public and then delisted. But there's also other groups who did not go public. They helped their portfolio companies go public individually. In our region, we had Jabbar Group with successful exit. We had back in 2009 to 2012 or 13 N2V, and now IMENA, which is planning to go public itself, not take its companies individually public. So let's react to this new model, or it's not new, it's an old model, but this holding model in comparison to other models. And let's talk about it from 3 different angles. And I would love for each one of you to take an angle. So maybe I'll just volunteer you into this. So Abdulrahman, you can take the VC angle. So you start with the big funnel. Dima, maybe you take the LP angle, and Ape, if you take the founder angle. So comment please on this model. What do you think its advantages, disadvantages for this model? Abdulrahman, let's start with you.
All right. I mean, I don't like to prescribe directions, right? Like we all have to follow this direction and this is the right way to do things and this is the right way to create exits. I'm actually excited. Like we need a couple of big, well-funded players because the existing corporates in MENA haven't done much in terms of M&A. It's going to be the new generation of kind of growth stage startups that understand this field, that have been in the area for a while, that have good distribution, that are probably going to be the M&A engines and provide some much needed liquidity outside of the IPO pipeline. But this doesn't feel like just an IPO. It also feels like an aggressive push to race, because in each category, they are competing against very strong, well-funded players. And the faster they get to public markets, the more valuable it is, and the easier it is to kind of try to cut ahead and create synergies. It will be challenging. I am curious to see how the market reacts to buying a holding company of, a basket of tech stocks and diversification, kind of simplifying that cap table and attracting international kind of expertise is always great. But the synergies piece, when we talk about this model in particular, is one I'm fairly skeptical about. There haven't been much integrations that we've seen historically and like amazing synergies unlocked across holding companies. And like typically they're given at a discount because of the additional overhead. And each of these companies has very different DNA. So I see it more as a diversified portfolio. You get exposure to a basket other than, because we have the classifieds here and we have the car listing here. It's such an amazing opportunity of investment that couldn't be done with a partnership.
As a VC, do you think there's more potential returns and a holding model in general, not talking about IMENA or any other company, in a holding model where you go all in and on a few companies, or investing across 20, 30 companies as a fund?
If it's expecting more, let's say, stable returns, yes. But if they're going to make big bets, moonshots, I think this model is like you're making too few bets to actually be able to take gigantic risks to kind of really swing for the fences. So not exactly my preferred model, not the kinds of startups that we would back. But these are fairly mature companies. They've been at this for many years. So I think like I wouldn't really classify them in that same vein. And we haven't talked about all the people who have attempted to do kind of these smaller models and have, not succeeded. And there are many. So I typically warn people, it looks shiny. Yes, I'll create a couple of startups. I'll own them. I'll be both an investor and a founder. And I typically don't like that, have your cake and eat it too mindset. Founding one company is difficult enough. Please launch it. Each of these companies had somebody leading it, focusing on it in the early days, kind of birthing it into fruition. And now we kind of, in retrospect, will reinterpret that story. But I am hoping to, but I am biased. I'll admit, I'm curious to hear everybody else's perspective.
That makes sense. Dima, let's take the LP angle of this. What do you think about this model?
Sure. So we're always challenged by international LPs and LPs that do multi-asset classes that we don't have enough tech IPOs. So I think this is a good initial start for us to see more IPO action. There are a lot of IPOs that have been delayed. So this is a positive signal, right? And in terms of diversification, there is a type of LP that likes that diversification, especially those family offices that have not yet risked or invested too much in VC. This model kind of works for them. So I do see this attracting a certain type of LP that does want that diversification, finds it a bit more de-risked than going into one of these companies alone. So I do think it will appeal to a certain type of LP. And, you know, we are still behind on tech IPOs, but this will enable IMENA to increase their equity in those companies, to create more publicity and PR. So I think there is an indirect advantage that they will see, the companies themselves will see. They will be able to raise more funding off of that PR and grow and maybe eventually IPO themselves. So I do think for LPs, this is good news all around. For Jordan, it's not the best news. I'm a bit jealous. You know, I mean, I was born in Jordan, the founding team, the investors. It would have been amazing to see this success story, this IPO in Jordan. But we all know like there are so many macro challenges. But yeah, I think for LPs, it's a positive signal. And we need to see more tech IPOs.
So, Dima, you mentioned you would love to have this IPO in Jordan. Earlier this year, we had the Talabat IPO. It was a huge success story for Talabat in Dubai. So why do you think IMENA chose Saudi, not Dubai? It seems that there is liquidity in Dubai already.
Saudi's focus on tech IPOs and the strategy and the enabling environment. There's a whole program. I think it's very encouraging, and it's been set up in a way that encourages those IPOs. And we're seeing a lot of smaller investors and LPs, ultra high net worth individuals participate. There is a huge appetite in Saudi for tech. You know, the past 4 or 5 years, we've seen a lot of family offices go into tech investing. And because they are more traditional investors, I do think this might be a good fit. They are used to seeing holding companies and do back holding companies, and like the diversification to de-risk, because it's their early stages of getting involved and investing in VC investing. So I think there is a strategic match.
I like that. So they're used to holding companies, family businesses, and now they're bringing them a holding company, not just one company for the IPO. Makes sense. Abe, let's take the founder perspective on this.
So before I talk about the founders, I just have to tell you guys that I did work for Naspers for 3 years. So I was very when I worked for the Bizzle, I did say that I joined in that really hot era where Naspers was really trying to consolidate into, at that time, 3 verticals: education, classifieds, and they were trying to dabble with fashion and stuff. And I did see a whole bunch of them trying to attract founders, especially in these verticals, to come on board under this whole Naspers umbrella. I've traveled with them from Asia to Africa when they bought many companies in that classified space. And the reason why Khaldoon went to Saudi to fundraise is because Khaldoon's businesses don't exist in the UAE. Both Jenny and OpenSouq have no footprint whatsoever. And I know because Adi and I, we used to have a lot of sparks and conversations. He's a good buddy of mine, by the way. When we were talking, when he was CEO of OpenSouq and I was CEO of the Bizzle, and we would talk all about what's happening, and they found a much better growth opportunities for OpenSouq in Saudi Arabia than Dubai, because the Bizzle kind of owned that whole UAE market at that time. So it was very expensive for them. So that was one. And then Jenny just came out of nowhere with car hailing services. And then, I think their number one market, if I'm not mistaken, is Brazil. So they had a lot of these international conversations. On a founder's level, I actually met Khaldoon in 2010 when he came into Crystal, my original company and telling us about this. He wants to go IPO in a London stock exchange. And this was a different kind of pitch for the founders. You come in, I offer you the whole shared services model. I offer you access to, I think that time they were called Riyadh Ventures, if I'm not mistaken. I can't remember.
Yeah, I
exactly.
remember that. Yeah, that's correct.
So they were talking more about how can we collaborate. They wanted to bring a payment gateway, and that's why they brought Khalil and Teller, and they brought many of these. And I think they also went head to head in classifieds on top of with the GTR, or can't remember what was the group name, when they bought a couple of platforms as well. Their pitch was very convincing, saying, listen, you give me a huge chunk of your company and you'll never have to worry about funding and all of that good stuff. In all fairness, in all personal, like, he really lowballed us tremendously. At that time, Crystal was still growing. I think we were at 600 employees or something. And we had no interest. He did have two things that were very compelling in his story, is obviously, other than funding, was access to markets. Like, they were like buying companies in the ground. So that, as a founder, sounds like something I can easily enter a new market without, like, I can de-risk as much as possible my business entering a new market, whether it was the Kingdom, UAE, or Qatar, or any of these markets they've been in. And number two is there was also that support, because keep in mind, for founders, a lot of times founders feel super lonely when they're at the top because they don't know who to ask and where to go, right? So he offered that layer. At that time, we had other ideas, and obviously we had a very aggressive board, and they were like, no, we don't see it. And honestly, the price wasn't right. That was the main reason. So we won't beat around the bush. But that model, I don't know how scalable it is. I know I can't remember the name of the group that bought the Bizzle. What's his name? Haidar's group from Pakistan that bought. They owned Butte, they owned that. So there was another group. That model was beginning to pop up. It's like a family office model on steroids kind of thing, where they give you all of this interesting perks and interesting things that they can help really the founders. It hasn't caught on, I think, because of two things. As you say, we are a bit behind on a global level, but because there's a lot of money to be still made in infrastructure. Keep in mind, we are an up and coming region. Tech is still not at the monetizable level that groups would look at. So they would say, I'd rather build a mall, or I'd rather build whatever, they'll make quicker returns for their investors. And as we grow, more CVCs are coming up, more corporate venturing and stuff like that. We're beginning to see that in the last couple of years. I think Abdulatif Jamil did a fantastic job with that in Saudi Arabia with his ventures, but there's still, people are still getting into that. So on a founder level, it's still not, I think, as attractive. But the model is getting better and better. And as they, look, Khaldun took him, 15 years to get where he wanted right now. So it's just because it's a new concept. But bravo, because he stuck to his guns and he kept at it and stuff like that.
You mentioned that OpenSouq and Sell Any Car is like kind of similar, but Genie came out of nowhere. It's different model. So they're not specialized in, let's say, classified ads. They're trying to diversify in other verticals. As a founder, would it feel more comfortable for you if you go into a group that's like specialized in one vertical that's yours, and then they can help you expand or merge with other companies?
So listen, again, there's this co-founder matchmaking mentality, even when, Khaldun was pitching, because technically when he comes in, he's coming in on an ownership co-founding level. And obviously, a lot of the founders usually need help in their vertical. And that's why, even if you look at the group now, even on their website, they were very heavy on marketplaces. You know what I mean? Like, and that's when they first started their thesis. But again, their thesis is almost 15 years old now, right? So, so that's why, they did not enter, the new, push of, I don't know, like fintech and now cybersecurity, and like, like they stuck to their guns. And I think a lot of new founders want to see a bit of innovation as well. So that's why, being focused is one thing, But when you're a scale up, right now, you tend to start broadening up your horizon because you want to add new products that would complement your offering. You know what I mean? And I'm not saying any for a company that's been out there for 15 years, them not being to but attract because there's and I don't know. I think you guys are in the business, Abdulrahman and Dima. There's like what 200,000 startups, maybe 500-600 scale ups that could have had, you know, more conversations with groups like that for them to enhance. There's something missing in the formula. That's what I'm trying to say. And I don't know why a lot of founders have, hey, any decide, no, I'm going to do it on my own. But that's how I feel.
Okay, so opening it up to everyone, Abdulrahman, Dima, if you want to comment on this as a founder, or what would founders look for in a group versus a VC firm?
I mean, ultimately, it's a dependency, right? And I think a lot of the strongest founders don't want to have a single kind of source of dependency on any entity. They want to kind of be able to hedge their bets. They want to be able to have different flexibility. So I think if there's a good relationship and trust with an entity like this, if you've known Khaldun for years, it's a different discussion. If it's a new entity that you've never heard of and you're kind of, hitching your wagon to them, the best founders I know would never accept those kinds of relationships. Like they left, classical, incredible careers and power structures because they wanted to kind of chart their own path. So there's this danger of a negative selection bias if you kind of hitch your wagon to saying, hey, founder, I'll help you with this. I'll help. Don't worry your head about this kind of thing or that kind of thing. So as long as there's a good relationship, it's a core group of people who have had that history. I can see it working. Outside of that, I wouldn't encourage people to just kind of gamble it all in 5 bets and kind of expect VC style returns. It's still an interesting one, right? Like all the numbers we see are aggregated across all 3 businesses, so we'll have more data. I'm excited to kind of see like data and reports across these 3 businesses, across these 3 lines, across these markets. I think once this IPO happens, it'll be such a wealth of information that will be used as benchmarks and future valuation exercises. So this has a lot of implications. I mean, we see a 55% growth number. We don't know, is this 55% GMV, users, revenue? No clue. But in the future, that'll all be laid bare.
I'd like to also add something. I do agree with what Abdulrahman said, and I think if IMENA needs to keep growing, especially in the market now, and now they become a public company, I think they also need to start diversifying some of their businesses, plus, adding more verticals to their offering. You know what I mean? Like, when we compare IMENA to a Naspers or to Alibaba or all these companies, these guys have a huge portfolio of companies. You know what I mean? Like Naspers made their money on Tencent because they owned 45% of Tencent. You know what I mean? And it was, I don't know if you ever knew the story, but that's actually comical. But that's how they made their money, and then they invested in so many different verticals until they found a vertical. I don't feel that there is that adventurous or appetite for IMENA that has, or maybe they've tried, but they haven't found the right formula. And again, I do agree with Abdulrahman. Like, this is very interesting. I wish them the best because this could be potentially another path for growth and funding for a lot of the startups. You know what I mean? So if more groups like that come up, that would actually start creating more awareness. Plus, they would create more wealth as well for everybody.
To your point, actually, Abe, on diversification, I know they did attempt food delivery at some juncture in the past. I think it was with Hello Food back in 2013. I think they invested, was it like 8 million in, it was Rocket Internet, I think, wasn't it? It was Rocket Internet platform, but they partnered up there. I think Easy Taxi was the same, but now that's Genie. I think that's
Easy
transitioned
Taxi
into that. So,
rebranded to Genie. But again,
yeah.
Hello Foods was a marketplace, so they really doubled down on their marketplace, like strengths, which is at that time was the right time.
Yeah.
But nowadays, like 7-8 years ago, nobody talks about marketplaces anymore, right? So
When you mentioned the Tencent, it did kind of remind me of like when you see China, that ecosystem is built around like 3 gigantic companies. You've got Tencent, you've got Baidu, and if this model really picks up and has some amazing, strong distribution players, and it could morph in that general direction. Is that good? Is that bad? I haven't done enough homework on the Chinese startup ecosystem and how stimulatory that is, but that would be an exciting contrast.
But there's a rule here that like MENA is 23 countries while China's only one. So there's regulators played, you know what I mean, like a controlled growth for these three companies, right? So here, as Dima said, you know, IMENA, born in Jordan, had to move to KSA, and you know what I mean, because it's such a different. And now we're going to see more companies, but you're still dealing with 22 regulators, cross borders, and all these other things. So that China is a bit different. So, but yeah, I'm very curious to see what happens with them.
Same here. We're all excited and encouraging them to show us what's the next move. Jamie, take us to the next story, please.
Yeah, let's chat alternative financing and fintech. Something arguably you know much more about than I do, Ahmed, so I should nearly defer to you on this one. But in any case, Irad, Riyadh-based fintech platform offering RBF, revenue-based financing, and fixed-term financing. They've raised a $16 million pre-Series A, long list of investors. They're YC graduates, so Y Combinator participated in this round as well. You've Neva Capital, Careem Ventures, Al Jazeera Capital, Arcia Capital, VentureSuq, and Joa Capital. So plenty on board there. Context-wise, founded back in 2022, obviously focuses on SMEs and addressing that gap which exists there. The model is relatively straightforward. We connect to the company sales, accounting, marketing, proprietary data assessment, make a financing decision, and I think it's usually within 48 hours. Loan size ranges from 40K to all the way up to $2.7 million. And the company says it's already deployed in the region of about $27 million to date across both the UAE and Saudi. And they said there's been plenty of demand as well. They suggested that they received over $532 million in funding requests since launching two. But look, it's a space gathering a ton of momentum. Obviously, we saw Idris Al Rafai's Flow 48 earlier this year. They had their $69 million round. Look, I'll defer to you. Yeah,
and
Lendo
$690
as well.
million
Obviously,
facility from JP Morgan.
The massive facility. So look, it's obvious on one level, in that like there's such a gigantic. Obviously, it's about execution.
I'll tell you my opinion, Jamie, but let me ask our guests first. So it's a very packed cap table, too many big names. Why do you think so many funds are leaning into this round, or maybe into this model, SME financing? Is SME lending the next big thing in fintech now in the region?
I mean, it seems like the year of debt, right? I feel like that's kind of been the most recurring discussions, business models, founders, new funds, private credits kind of taken a whole new level this year. I mean, we've been seeing that kind of ramp up. And I was looking at some of the previous episodes, and I noticed like the credit discussion has been repeating and repeating and repeating. And here we are, and we're gonna see the collision of kind of these alternative platforms versus the competitors coming with a more embedded, vertically integrated approach. And each one is kind of pitching their strategy of, I have distribution, I have more data, I can preempt, versus players like Irad, who can say, oh, I've been doing this for longer, I've got more historical data, more activity in the region, and therefore that's why I'm better. You know, we've taken several different bets across this whole stack, but it's not just the lending, right? It's the data infrastructure, the data enrichment, the regulations that are coming, ease of licensing. So we're starting to see a lot more activity. I've had a couple of portcos use Irad. They said it was a great experience, quick turnaround, and you know, honestly, there was a huge gap. It is significant, and they're probably still, even with this round, a drop in the bucket of the actual need in Saudi.
I think there are like 2 million SMEs in Saudi, and in the US, venture debt accounts for something around 35% of the total that a startup raises. And venture debt is up 94% in the US last year. So I do think there's a very big gap that we are making up for now. And this is why we're seeing this raise. And I think there will be a lot of more players that go into this. It's a very reasonable option for founders, right? Equity dilution is very painful on founders, and our exit average is like 10 to 12 years. Founders end up with nothing at exit. So I think it's about time. And like Abdulrahman was saying, there's a big gap to make up for.
I was with a bunch of founders on Friday, like maybe 20 or 30 of them, and they were saying that, you know, this SME funding is the new VC. honestly, because, startups are fed up of, talking to the same people over and over, and they're like, give me some numbers. And I'm talking about the founders who are, have decent traction, not necessarily profitable. They have, the rules of, they qualify to all of these platforms, and I think it's, because funding and financing has been such a bottleneck in this region. And we always, we kept saying, we'll fundraise from angels or some VCs. I know VCs have been maturing quite quickly as well in this region, but there isn't enough of them, or at least there isn't enough for the demand of startups there is. Now, quality of startups, that's a different conversation, but that's still, the demand is still quite high on that. And I think a lot of them are beginning to look at these platforms saying, you know what, like I have a couple of contracts that I can, go to these lenders and say, why don't I get some more money and stuff like that. So there is a sign of relief from founders that there's another avenue now that to get some more money into them. And I always used to say it myself as a founder, I'll take debt over equity any day. At least I'd take debt over something that is, yeah, I won't take that on an idea phase. Obviously, none of these will fund you on an idea phase, but I think that's what a lot of the founders are talking now, saying, okay, you know what, let's explore different vendors like that. And I've literally saw this firsthand 2 weeks ago, where one of the founders, they make decent amount of money. They're almost profitable. They have a spreadsheet of over like 13 platforms they're using in the region. They're in a couple of spaces, but one of the spaces is production. So whenever they get a job, they need, to get this produced. So they finance the production out of one of these companies, and the model has been working. So I think it's also going to create a lot of opportunities. And it's also going to disrupt a lot of the banking conversations as well, because, banks are very, they're coming along, but they're still not there yet. So that's something that I'm also looking forward to.
Go ahead.
Especially for SaaS, like there are models where this works perfectly and it makes a lot of sense. And I think it's just about, making sure the unit economics are there. So yeah, you don't set them up to fail. But I think for a lot of the growth stage startups, it's a viable option.
Yeah, I think the way I see it, and exactly right, Dima, the revenue-based financing model was created for SaaS companies.
Yeah.
Specifically because they have really high margins and they can afford to give up a percentage of their monthly revenues to pay back the loan. So it's a percentage, it's not a set amount. But SME financing is a bit different from the way I see it. So there's the startups and the SMEs. SMEs have mature business models, let's say. They're newer companies, but their business models are mature, tried, proven already, and they're just in the game of execution or executing that proven business model. In startups, they're looking for a new business model. It's a bit risky. It's not the same. So if it's a SaaS, they have predictable revenue streams. So RBF companies can work with them. If it's not SaaS, then that's a bit more risky for a debt provider. And the way I saw it in the market, I think we don't have enough SaaS companies in MENA region. So that's why RBF doesn't really work on its own. So all of these companies, Irad, Capify, FlapCap, 448, and many others, they started as RBF companies, but then they kind of slowly pivoted into SME financing. Again, because ABEZ, you mentioned that banks are still rigid, they're not really helpful to SMEs. So these companies can provide those kind of loans. And especially when there's tech-enabled SMEs, like, for example, restaurants that are connected to Talabat. Irad or any of these companies can connect to Talabat and take the data of those restaurants and decide on how much to give them. E-commerce websites like Sella and Zed. Those loan providers can connect to those platforms and find the potential companies to give loans to. Now, it seems that there is more supply than demand, especially on Zed, for example. I had a call with the founder of Zed, and he said, we have suppliers of those loans, but not much demand. So that's why I think a lot of these companies are kind of pivoting to SMEs, not to just startups or tech-enabled companies. And Lendo is the biggest success story, and everyone is trying to follow that lead.
Look, there's this debate of, do you consider the financing a product or a feature? right? Because this is getting built in. Like if you see a lot of pitches these days, it used to be like AI was the magic sauce that will get me like retain customers and will allow me to improve. Now it seems like fintech and financing and loans are the magic sauce. Oh, in the future will allow for like a kind of BNPL integration. We'll do this kind of flexible plan. And everybody seems to be getting into the game of packaging and reselling credit. So like in your case, when you spoke about e-commerce, there's a huge demand in e-commerce. There's many people who want loans in e-commerce. Maybe they don't want them to the risk level that the suppliers want to give on Zed, perhaps. But this is a game that Sella could get into. This is a game that Foodix is getting into. This is a game that all of these distributors are getting into. And if we looked at the SMEs that are digitally integrated, that you could re-underwrite and where tech integration plays a huge role, e-commerce is the obvious one. It's a huge one. It's the biggest sector that you can immediately access. F&B maybe huge share there, and then it suddenly gets harder and harder to kind of break into those customers. Customer acquisition cost starts getting more complicated. So I'm gonna kind of want to see is this really going to be the defining feature, or are we all kind of just repackaging the credit from the same kind of financiers that are funding, and it's like we're all kind of resellers of credit for maybe like 3-5 big players in the region and globally.
Yeah.
But I think,
Abdulrahman, I'm seeing like vertical credit providers, like for example, BRICS. They're providing credit in the form of buy now, pay later, but still it's credit to construction companies.
Yeah.
So that's a very focused vertical.
So no, exactly what I do want to say. I want to say, I think I think there's two things here that we can look at is the data. Who is really coming up that? And I think also there's, you guys have heard of this in the US, what's happening with the baby boomers and the silver tsunami conversation. And that's why I think debt credit has been increasing tremendously, is because people are buying cheap, very well-run businesses, and then going back and getting that, that financing, which didn't cost them anything. And that's why we're seeing that trend. And we're going to see that here, by the way, because, we do have, I know we have a relatively young population, but we also have a lot of this old money that's sitting with a lot of these people who are going to be retiring soon. So we're seeing a bit of that. But going back to the data aspect, yes, it's like the new gold rush of SME financing, because now they're like, okay, the startups, now they have a couple of avenues. Let's see how, where the economy can really, because keep in mind, governments now are beginning to look at SMEs because it is the backbone of any economy. So how do we improve, whether it's financing, how do we add more jobs, how do we create, because that's where the real GDP growth for any government is usually that SME layer, which is anywhere between 35 to 70%, depending on what the country is. So I think it's opening up and that whole area, but it all depends on the data. Some of these companies, SMEs, they're making a lot of money. Why would they need financing? But sometimes it makes more sense. So I think there's also an educational aspect of people that need to go out and see, why, that whole mentality, why should I play with my money? I'll use somebody else's money, but like at a right cost kind of thing. So it's very interesting how this industry is, and to Abdulrahman's point, I'm seeing almost every other deck that I get has some kind of financing go to it, and I'm like, you guys are not related to this. Like, yeah, but the data will tell us, and I'm like, all right, so let's see where that. I think data is key to this conversation.
But what you're referring to in terms of baby boomers selling their businesses is now called mini private equity. And I think we have a lot of those businesses, and we will see that wave because there is that liquidity and that potential in Saudi specifically. But on verticals, like you referred to BRICS, Ahmad, that's $1 trillion business. So you can build a unicorn just off of that vertical, right?
Yeah.
So I do think this is an unfolding nascent, trend that we're seeing. But I do think there is potential when it is vertically focused on such huge verticals like construction.
Fully agreed. And health tech and some other vertical health tech, like Claim, for example, and health tech.
And wellness. Now wellness is the new buzzword, right? So
Jamie, take us to the next story.
Yeah, so let's talk about, I guess, the infrastructure layer of private markets then. So we've Zest Equity. They've raised a $4.3 million pre-Series A, led by Process Ventures. I know we were talking about Naspers earlier as well, so we're hitting that beat again. They also saw participation as well from Morgan Stanley Inclusive and Sustainable Ventures. Again, Process have been pretty active regionally as well. They led Keen AI's 10 million seed round recently, which is one, obviously the largest seed rounds that we've had. And they also co-led FWD's 170 million Series C back in 2022 as well, I believe. In terms of Zest, founded back in 2021, started out as a secondary trading platform for startup equity. Since then, it's maneuvered and changed, and it's sort of grown into a broader infrastructure play. So digitizing the way investors and private companies handle financial transactions, particularly those kind of under the $100 million mark. So think like SPVs, cap tables, legal admin, and the idea is that it's all done just through a cleaner, sort of more tech enabled workflow. So to date, they mentioned they've facilitated over $155 million across 115 deals. And so this fresh capital is going to be put to use towards product development and scaling operations across the UAE and Saudi, as well as hiring some technical talent too.
Congrats to the team, the founders. They're amazing people. I met with them a couple of times, and they're really persistent, and they're really trying to make it happen. Why did they pivot? Why Secondaries platform or exchange didn't work in MENA? Or maybe globally?
I can start. When I was at Rainmaking, one of our corporate clients who really wanted to build a secondaries market to attract, and I can't disclose who it was, but it's just a huge financial institution in the region wanted to do that. And the amount of, especially in the secondary aspect of the business, the amount of regulatory touch points that we had to really get into, and then there was quite a lot of work, from the KYC's aspect to the regulatory aspect to the custodian of the money, and it was just too much to handle. The undertaking was so big because of the fragmentation of the MENA region, because there's so many different countries and stuff like that. Even when we started to build that, they're like, oh, companies had to be either Delaware or had to be somewhere in, and then from there, and it was just then, the pool of potential customers went from like this much to like super laser focused. So I think when I remember the founders of Zest, they were talking about that, and we're like, listen, we have experience in this, and this is what you're going to focus. And they were like, okay, but we want to try it. And I'm like, all right, go ahead, try it. So I'm very happy that they pivoted into what Zest is today. I'm a user of their platform. It's an excellent platform, I think. I think the team is fantastic. And I think they have so much room to growth because as we get more financing options and as we get more money coming into the market, more of those are going to happen. So hopefully they would ride the wave as they're one of the early players, because even on a global level, I personally only use them and maybe Sidecar, and I can't remember the Carta. I think that was the three that we've always used. And we did, by the way, 10 years ago, or not 10 years, 9 years ago, invest in a company out of Finland called DD Ready that also did almost the same thing. Very cool platform, but they were very early and they were way before their time. So I think this space is going to really, I don't know if it's going to heat up, but I think they're going to get a lot more traction because it's talking about funding is one thing, but putting it all on paper is the other nightmare, which founders do not like to get into. And I generally feel there's so much more features they can add to the platform that's going to come in, and I'm looking forward to hear more from them.
I don't think it's a complete pivot away. I think it's a later. I mean, if you look at the market, there are people who already want to do transactions. They have the company that they wanted. The kind of the wind is at your back, and you're just enabling that to happen versus trying to find the right company for a secondary transaction, scheduling all of that, marketing that. Like they already know what they want, and they were unlocking such a huge problem in the market and building a wide base of Zest users across multiple networks, across multiple companies in the early stage, and then kind of graduating with them. I think it makes a lot more sense to kind of start with the market at this stage. And then as you see more and more like professional secondaries buyers, etc., that you kind of have those as options. But like, which angels are actively buying secondaries? Which funds are actively looking for secondaries that want to do it through a platform that aren't going to do it through like the occasional conversations? I don't think we have enough proliferation yet. So I do think it's smart. It's good that they're attentive, and process coming in is huge. Like they've known this industry well. They've invested in different public equities all over the world, Republic, Thunder. I think they had another platform similar to that, like a robo-advisory in Indonesia. So they know this game and they know how to kind of structure these transactions. And I think that will add quite a bit to the know-how of the management team.
And it seems because they're working on infrastructure, they have everyone who's involved in all these transactions on their platform, right? Somehow you're offering or you're selling or you're buying, you have that connection with those players or shareholders or buyers. And if you want to promote a deal later on, if you get an investment banking license, and you want to promote a deal, you can reach out to all of these at once because you already have relationship with them. Dima, what do you think?
Yeah, I think that's very important for LPs. Secondary sales would increase your IRR and your DPI, and the only way for us to see more funds and more LP engagement is for us to see more of, those secondary sales as an exit option, right? Yeah, you don't need to wait 10, 12, 15 years. So for fund managers and growth stage startups that have that, they're at that inflection point where they can get those secondary sales. It's very encouraging for the LPs on their, on their cap table, the investors on their cap table. And secondary is increased by 45%, if I'm not mistaken, in the US last year. So it is an upcoming trend. It's about $160 billion market now. It's a real exit option for especially the early stage investors that have been in those companies for 7-10 years, and the founders, the founding team.
And the early employees who vested their shares. Yeah.
The unsung
So do you
heroes of
think?
the ecosystem.
Yeah, exactly.
Early startup
Seriously.
employees. Yeah.
Really, like let them exit, give them that win. They'll go on to start, great startups, right? Having been part of the success story. So I think it's on all of us, and it would be a win-win if we get more secondaries going in our region.
I remember a conversation with an angel friend who I'd referred to Zest when he wanted to do like an investment with a couple of people in his network. And he calls me back. He's like, "Oh, this is expensive, Abdulrahman. I'm not going to do this. I'll figure it out on my own. I'll hire a lawyer, but they're charging so much, and you can't get me a better price." Like, all right. And lo and behold, 6 months later, he doesn't complain about Zest as much after he's seen how brutal it is to actually manually do this and keep it up and keep track of it and the questions you get asked by everybody.
Definitely,
100%.
definitely brings value.
Do we have enough late stage companies for Zest to scale up their operations in Saudi and in MENA region?
Honestly, no.
Yeah.
I'm being honest. Like we don't. But I think, when you talked about the funnel, or why I talk about the pyramid, I think we're building the pyramid as we speak. So there's more scale ups and more, as you said, more international players are beginning to start looking at this area with M&As and funds coming in. And we need that capital to come in, for international expansion. We also need, I even want to add to what Dima was saying, like we want to see the multiplier effect. We want to see those teams from these teams. As much as I hate seeing on LinkedIn X something, but
PayPal mafia.
yeah, whatever.
Careem
No,
mafia.
X Careem, X, but you know what? We need to create that multiplier effect, because these are the people who want to go out and create more companies, and that pyramid needs to be like, in order for us to build, whether we're stuck to a government agenda of how many unicorns need to be produced, or the actual organic production of unicorns and whatever you want to call these companies, we need more money to come in, essentially. And for that, we are there. I think there's quite a bit of companies that are now growing very nicely and very comfortably. But I loved how in KSA and in Dubai, they've opened up the public market as another form of exit because in the beginning, at my time when I started building in 2005 and 6 and 7, honestly, it was like VCs, and it was like what, a bunch of VCs, and there was no other way to get funded, right? So, but now there's like the M&A folders, M&A path is coming, the public route is coming. There's the secondary market with, hopefully more of those coming up. So there's quite a bit of avenues that people can look at, and that's what's gonna create that pyramid that I keep talking about.
Okay, very quickly before we move to the next story, the last story, why do you think we don't have secondary funds in the MENA region? Maybe 2-3 points very quickly.
They're coming. I
Yeah.
mean, everybody in the beginning wanted the simple structure, like VC was fairly novel. Don't
Yeah.
give these complex boutique products. I just want the normal, simple 2 and 20. I don't want like this rolling fund. I don't want this other thing. Just give me the basic thing. Let me get my head around it. And then we can start looking at these differentiated strategies. And if there aren't any of these early funds that need liquidity, then who's the secondaries fund really serving? But I think there's other potential things. Like, we think of it as they need, there's fundraising and need for liquidity, but there's other cases. Like, I've had a founder who, one of the family offices that invested had a death in the family, and they needed to liquidate their position. They were willing to liquidate at at the same price they got in, which was a very generous price, just in order to clear up things with dividing everything. And platforms like this make those kinds of things easier, make that transition a lot easier. So there's a lot of like bumps in the road where you just need to figure out solutions, and it's very manual to kind of find willing buyers. So hopefully things like Zest can help in those cases, and it scales with time, and hopefully secondaries funds kind of give us all a little bit of extra juice in the tank for the next fund and the next one.
Yeah, we're going to see VCs have an allocation within their fund for secondaries. That's something we're going to see for sure. And we're going to see funds of funds have a dedicated allocation for secondaries, because it just bumps your IRR up so quickly and efficiently. We're going to see it as more regional LPs demand DPI, right? We're at a stage now, I think, where that we've reached maturity in a lot of funds, that we're going to have it embedded within the strategies of VCs and funds of funds.
Would love to see that.
To double down exactly on what Dima and Abdulrahman said, I am seeing a lot more funds coming with, they're dividing now the funds into early stage capital, secondaries fund. There's also this venture building magic. I don't know. I want to look more into that, because I've tried it for the last 6 years. Have my enough battle scars with that, but because I think it can't just come in with one thing anymore. You're gonna have to diversify as the markets mature and go through that. So I'm generally looking forward to this. So let's see what and I've been seeing a lot more funds and a lot more bigger funds coming in to the region as well. So this is something very good news for all of us.
Now let's see who's acquiring who. Jamie, tell us some news about Calo.
For sure. Our last story today, I suppose, a rare one in terms of direction of travel to a certain extent as well, in that we have a Gulf Point startup making a push into Europe, and it's not via soft landing or test market, but actually via acquisition as well. Like, thinking of other startups recently maybe that have acquired in the UK, I know Tarbit Gateway, I know back in, I think, late 2024, they acquired Vine for their open banking play. But again, it was different in that, like, Tarbit Gateway's engineering team are based in the UK in the first place, whereas this is, they're really just expanding for the first time, setting up operations on the ground. So they've acquired Fresh Fitness Food and Detox Kitchen. This is something they earmarked as well when they announced the Series B earlier this year. So this has been in the work for quite a while. But they do the best known health focused meal services in London. So obviously this gives them that sort of instant infrastructure, customer base, and operational capacity in what is a very competitive food delivery market in London. So this obviously follows, like mentioned there, 25 million Series B led by Nua Capital, and we saw STV and Careem Ventures as well. The round has also been upsized to $50 million, so we're waiting for that to come to fruition at some point. So currently values the company at about 250 million. They have 100 million in annualized revenue, and profitability not too far away apparently. and they've already earmarked the 2027 IPO in Saudi. What's interesting as well, I think, about the acquisition strategy is that rather than run the two UK brands separately, they're just folding them directly into the core platform. So customers are going to be transitioned to near identical plans under the Calo name. So it's a full brand migration, not just an asset roll up.
It feels like a private equity play. And because of the hype of the IPOs in MENA, and they said they want to IPO in 2027, it seems that any company that succeeds in executing any specific model, that model is big enough for one company, but it's not too big, or it's not big enough for an IPO. So now it seems that they're trying to buy other smaller ones that are doing the same in different geographies and just combining them into one to go to the stock market. Is that what's happening, or is something else?
I don't know. I think when you raise this round, you're proving that you're able to maintain pace and growth, that you're not leveling off. And if there's one thing about the Calo team, is they're not known for pulling their punches. If they expand to a market, they're expanding full conviction. They're not trying to just capture, London. No, they're trying to target the entire UK. So that was something that stood out. Even the positioning, they're talking about health conditions, longevity as meals. So they're also trying to position themselves more in the wellness space and kind of build differentiation there and build deeper inroads. So I think they're proving to the market that yes, we have a playbook. It does work. We're not promising that we're able to expand internationally. We've done it, and not just across the GCC. We've done it in other markets. And if they prove themselves in the UK, then they can point to the rest of Europe as potential growth vectors when they're ready for their IPO. The other interesting element, I think, is that if they choose, like, they're obviously gearing up for an IPO, and that could be something that happens in Saudi. But it could also open up access to London as a way where they can have both options there available, and makes them very, very attractive and kind of gives them multiple avenues. I'm excited. I want to see more of these kinds of stories, and fingers crossed.
Yeah, just building on
Great.
what Abdulrahman was saying, it's a way for them to start building appetite for the IPO. It's a way for us to see regional startups go public on international markets. And I think this is a very strategic move before that happens, right? They need to build up brand recognition if they're going to go public on an international market. So it does make sense. And again, it will help other founders to see that we can build global companies. We can build for scale. We know how tough it is to scale from one market to another in our region, but this is proof that you can actually build for a much bigger market and scale the other way around, right? We don't see this very often.
And if you remember the early days of Calo, when they were first growing, like the question around the ecosystem was, this is not a tech company, this is a kitchen. Right?
Yeah.
And that was the skepticism.
Yeah.
They've blown past that, and they set a strong trend, and I think they're gonna try to do the same.
Honestly, I don't know the space very well, in all fairness, so I'm just being honest. But I always loved, my even as a founder, this ambition is for us to build to export, and I think this is another play or another story, another success story. Let's create, and again, uh, usually when we create what we call like a bridge or a landing, it does work both ways. We have a lot of founders coming in because the opportunity is coming up, but it's also really nice to see a success story, like a homegrown company from here, leaving to more established markets, like the US, the Canada, the UKs, the Australias, and stuff like that. So this is something that we've been seeing. We're going to see a lot this year, by the way. We're seeing a lot of bridges created to major cities globally. Obviously, the tariffs thing is going to play some kind of effect to this, but I'm beginning to see a lot of founders who are really focusing on entering new markets, and they're doing really well, and with conviction as well. Like as Abdulrahman said, and Dima, they're people believe that their product really fits in different markets. We used to do that a lot with Asia in my last job, where we used to bring a lot of companies from Singapore into this region, or Korea. But we're now seeing a lot of companies going to Singapore from the Dubai, from the Riyadh, with certain specific tech. Also, as I'm a graduate of the Jordanian ecosystem, most of our business was just literally picking up from Jordan, keeping the kitchen back home, and just going somewhere, whether it was Saudi, UAE, USA, so far and so forth. So I think that's that's a really good thing, and we're going to see a lot of that, and I'm happy that we're seeing that we're going to become we're doing a bit more export in tech. So that's looking forward for that.
Yeah. M&A is hard, especially like two. Hopefully the guys pull it off and write a book about it.
Abdulrahman, would you rather see them go public in London or in Saudi?
Saudi, man.
I know you mentioned both options, but what
No,
would you rather see?
I want to see Saudi. All of the investors across the whole region want to point at several success stories. It will really be a shot in the arm. But I'm glad they have optionality because we want to see them succeed regardless.
Before we wrap up, a big thanks to Octa for sponsoring today's episode.
Yes, if you want to get paid faster, access financing, and automate your receivable process, head to weareocta.com. That is weareocta.com, and take control of your accounts receivable today.
With that, thank you so much, Abdulrahman, Abe, Dima, for joining us today. We really enjoyed the episode. Please find another time on the schedule to join us again. And Jamie, thank you so much for bringing us all this news.
Thanks so much, guys. Great having you on.